Hi everyone, welcome to another video by Optionables. My name is Saket, and in today's video we have a lot of things to discuss, starting from what happened to the markets today all the way up to what are the trades which we can take for today's market. Towards the end of this video, I'll also be sharing you a trade idea what you can take for month end, but I would definitely recommend you to consult your financial advisor before you actually end up taking this trade, or you can definitely check it out on virtual trade. So now we'll be quickly starting off with what exactly happened to the markets. If you look at the markets today, there was absolute bloodbath. The markets actually ended up opening 2% down, and it almost remained down throughout the day. The only positive what we can take from this is, even though the market opened down, the sell-off didn't continue. It was able to hold 15,800, and throughout the day it consolidated around the range of 15,800. So now if we come to sector specific wise, banking, auto as well as cements were the worst performers, where the index itself ended close to 5% down. So you can imagine, if the index itself is 5% down, the worst performing stocks might have fallen even as much as 7 to 8%. So now on the positive side, we had IT. So IT stocks are gaining mainly because rupee is getting depreciated. So one thing what we have to note here is, whenever the value of rupee goes down, majority of the IT companies, whatever we have, name it TCS, Infosys or Wipro, they are IT service exporters. That means they always receive payment in terms of dollars. So the moment rupee weakens, it is a big positive for Indian IT firms, because they are going to receive the payment in dollars. So tomorrow if rupee goes to 77 or 78, that means they will end up receiving more in terms of rupees, because they will be receiving the payment in dollars. So apart from this, the oil extraction companies like ONGC were also big beneficiaries of the crude oil prices going up. The crude oil today crossed $130 per barrel. This is a big negative for auto stocks, because whenever petrol prices starts to go up, it will discourage the new auto buyers from buying new vehicles right away. So they will actually defer their plans of buying a vehicle. Running cost is going to get quite expensive. So apart from this, when we look at the FII DII data, so again today they sold close to $1 billion or 7,500 crores. Even yesterday they had sold close to 7,500 crores. One thing if you note, in 2022 alone, we are just 3 months into the year, they have sold more than 1 lakh crore, and this is the highest selling throughout the year. Last time they had sold 1 lakh crore was sometime during the 2008 financial crisis. After that, FII's net figure on an year to year basis has never crossed 1 lakh crore. So this time it has almost crossed well over 1 lakh crore in just 3 months. So that will bring us to the next question: where exactly can we expect the bottom for this market? It looks like the war is not ending, FIIs are continuously selling. Where exactly is the bottom? So one thing what we have to keep a note of here is, whenever the fear hits the peak, that is when the markets bottom out. So when you look at people are telling that markets might fall up till 13k, 12k. They are also telling markets will never recover until the war actually ends, until the crude oil actually comes below $100 per barrel. So one thing what we have to note here is that the markets are leading indicators and not lagging indicators. That's the reason markets will discount the worst case well before it happens. So even if you look at the COVID time, during March 2020, so market made a bottom of around 7,500 right after Modi announced lockdown. So if you look at it, the cases were just in thousands when Modi actually announced lockdown, and the peak hit somewhere in May as well as June. So now if people actually waited saying that let the lockdown get removed, let the cases come down, they would have already missed the majority of the rally. So whenever the fear is at its peak, that's when the markets bottom out and they start going up. So that means, are we closer to the bottom? I would suggest yes, we are getting closer to the bottom. Maybe 15,800 or 15,500 might not be the bottom, and the markets might head much lower from here, but the bottom is not far away from this particular level, because the fear right now is extremely high, and this is where the bull market actually climbs the wall of worries. So the bulls can only climb if there are a lot of worries, it can go much higher. If the worry starts to come down, then the wall of worries is going to stay very small and the bull won't be able to climb up a lot. Again, nobody really knows where the bottom is, but one thing you should definitely not miss out on is buying some good stocks at this particular level. Let the market fall another 10% from here, it doesn't matter. What you are getting right now is really good levels to buy some good quality equity shares, because before you even realize, before the things actually start to become okay, the markets would have run up quite a lot and you will miss out on the opportunity again. So this is similar to what exactly happened in COVID. And one more thing I would like to add here is, if you start to see people around you sell shares due to fear, thinking that the war is going to get bigger, or the crude is going to go still higher, or FIIs are going to sell more, then that should be a clue for you to start adding more stocks. Next, moving ahead, we also have one more positive news. That is, today Germany announced that they won't be stopping the import of crude oil from Russia because it is going to hurt their economy pretty badly. And this was a big positive news for the markets. And you can see that German index actually opened 4% down. From there on, DAX already is trading in positive, and this is a big positive news for the market overall, because markets recovering 4% intraday is a pretty big thing. And even if you look at SGX Nifty, it is trading around 150 points higher. So this can change anytime. In case if the US ends up falling around 2% today, even SGX might end up changing. And so what we have discussed up till now is the global cues. One thing what I would add regarding the local cues is, we had the election poll results today. So the UP elections got over and we had the poll results today, and we could quite clearly see that BJP is leading. This is also a positive news, because people were expecting a much closer battle in these regions. But you can see that there are quite clearly decisive parties which have got majority in the polls. The election results might differ. As per the poll, the parties have got decisive majority in each of the states, and when there is certainty in the market, then the market usually likes it. So the thing is, let's say it was much more closer than what the polls are suggesting right now, then markets would definitely not like that, because whenever there is uncertainty, the VIX is going to go up and the markets are going to remain extremely volatile. So with this, now we are also going to look at what exactly happened to the intraday trades, and I am also going to share a particular strategy which we have already implemented, and I would also like to share the strategy with you. One more thing which I would definitely recommend is to watch this video till the end. So don't miss out on that, because you would want to definitely look at what are the specifics of this strategy, what is the risk involved, as well as what is the probability. So with this, we'll be quickly now moving on to the video. If you have liked the content, please do hit the like button, share this video, as well as subscribe to Optionables. Thank you so much for joining, guys. Hi everyone, in this part of the video, first I'll start off with sharing a simple strategy for month end. After this, I'll also be showing you the positions of where exactly we stand and what we intend to do. So this is a particular trade which I have already taken today, and I'll be sharing this with you. So this is only for educational purpose, and I would recommend you to consult your financial advisor before actually executing this. So without wasting further time, we will discuss what the strategy actually is and how this is going to look in the payoff graph. So the strategy which we are discussing right now is a ratio spread. So this particular ratio spread is taken for the month end expiry, that is 31st of March. We are going to take this ratio spread, and I particularly believe that we are more or less closer to the bottom of the market, and the uncertainty might remain for the next 5 to 10 days, but pretty sure that we are going to bounce back from here in the course of next 20-30 days. So with this particular thing in mind, I am going to share this ratio spread strategy. So the strategy is very simple. All you have to do is buy 31,000 month end put option. So this particular put option is trading at 654 rupees. So you are going to buy one particular lot of 31,000 put option and sell 2 lots of 30,000 put option. You can see that this is a very simple ratio spread. All I have done is I have purchased one lot of 31,000 PE of month end and shorted 2 lots of 30,000 PE of month end. By doing the same, you can see this is the payoff graph what I have got, and my break even is coming at 28,734 rupees. So that means which is almost 13% lower from this particular level. So am I telling that Bank Nifty won't move 13% lower? I really don't know, but I do expect that Bank Nifty will make its bottom more or less closer to what it is trading right now, and I don't see Bank Nifty breaking 30,000 by this month end. So I feel that Bank Nifty will end up taking a very strong support at 30,000 and it will bounce back, and this is a very good break even to have, which is almost 1,300 points further down from 30,000. So one thing what you should note over here is, in case if Bank Nifty ends up staying above 28,700, so no matter where it goes on the upside, you are going to make 6,000 rupees flat per single lot. So 6,600 rupees is your maximum profit for a single lot, no matter where it goes up. But in case, let's say the market starts moving downside, so from 31,000 up till 30,000, your profit is going to increase exponentially. So anywhere above 31,000, you are going to get a profit of 6,000 rupees. But let's say somehow the market ends up between 30,000 to 31,000, you are going to make anywhere between 6,000 to 31,000 rupees. So there is a 5x jump in case the market ends up closing around 30,000, and from there you still have further 1,300 point buffer before you go to a loss. Here you can do a lot of adjustments and make sure that you end up with a very small loss. So the thing here is I have not done with one lot, rather you can see that I have 700 quantity of 31,000 PE buy, so I will have double the quantity sell. 700 quantity will constitute to 28 lots, and this is going to be 56 lots. So this is the trade which I have actually taken, and you can see in case Bank Nifty ends up above 31,000, then I am going to make a flat of 1.8 lakh. That is a flat figure I am going to make no matter where the market ends above 31,000. So in case if the market ends around 30,000, I am going to make an overall profit of 8.86 lakh. But I am more concerned about the market ending above 31,000, because I personally believe that we might not fall below 30,000 unless the war intensifies. So let's say even the NATO starts coming into the war and they start attacking Russian troops, only then we might actually head below 30,000. Otherwise, Bank Nifty has already seen a correction close to 25%, and that is quite good enough correction what it has discounted for this particular war. So now let's see how exactly the market goes. But this is one strategy I would definitely recommend, because this is also very easy to adjust. Let's say the market starts coming below 30,000, you can quite easily just go and short a 31,000 call and start adjusting the position. So this is one particular position which I actually hold, and I also believe is quite easy to adjust, and you can definitely try this out on virtual trade or consult your financial advisor before taking the actual trade. So with that, let me just show you today's position. So you can see that when I open Firstock and when I show you both intraday as well as regular positions, you can see that overall today we ended up losing around 7 lakh. But in this 7 lakh, we lost around 3 lakh from intraday trades alone, 3,30,000, because many strikes, almost 5 strikes ended up hitting the stop loss. And the reason to this is the markets were falling, the P was going up, C didn't fall, and P hit the stop loss, then market started to bounce back up, and this time C also went and hit the stop loss, and overall we actually couldn't come to profits at all. Now if you actually look at the regular trades, from this regular trades we have lost close to 4 lakh rupees. But here one thing what you have to note is we had taken a lot of cash secured puts. So you can see that we have cash secured puts in Pidilite, HDFC Bank, Asian Paints, Nifty as well as Bank Nifty. So the important point to note here is this loss what you're seeing from the cash secured puts, which almost constitutes to around 1.5 lakh, is again a notional loss. So we are more than happy to take the delivery of the shares in case Pidilite actually falls below 2,000 or even HDFC Bank falls below 1,200. So we'll be more than happy to take the delivery. In case if it actually ends up ending below, we will definitely take the delivery. Otherwise, all these are going to recover and more or less end at zero, from which we are going to get a positive figure of 2 lakh. So I am not really concerned about the losses from the cash secured puts. So if you actually end up removing these as well, then we'll be only left with a loss of around 2.5 lakh. So in this 2.5 lakh, you can again see that we have a loss of close to 73,000 from this particular Nifty future alone. So Nifty future we had gone long, and this 200 quantity of Nifty future has given us a loss of 73,000, and even if Nifty bounces back from here, even this is going to get recovered. So if you see overall from the positional trades what we have, we lost around 2 lakh futures as well as cash secured puts, and we lost another 2 lakh from our positional trade, 1.5 to 2 lakh from our positional trade. So that is the position what we have today. And with this, we also come to the end of this video. And if you have liked this video, then please do hit the like button, share this video as well as subscribe to Optionables. Thank you so much for joining, guys, and see you soon tomorrow.